Okay, so we're looking at the futures markets here in our live class, and we're tracking what's happening at these times when we get to them. And historically, we've used what's known as a horizontal analysis. That is to say, to get these signals at the times that we've gotten them, we've used a horizontal analysis on the markets to find the times. And that basically means the following. When you look at a calendar, we can analyze time vertically or horizontally. So break your calendar up into a grid of 5 trading days: Monday, Tuesday, Wednesday, Thursday, Friday, right? And so the Flux software will scan for bank times, scan for moves that are regularly occurring at key times, historically, vertically. So today is Wednesday, and we've taught the computer essentially to go back and look at prior Wednesdays for these timing cycle patterns. And then it projects what it finds onto our histograms for today. So when we see a histogram chart, we're seeing the computer essentially say, these are the times where the banks have historically moved for the past several Wednesdays. Okay, so far so good. Now, there's a second side of this that most customers never explore. We have a Canaveral pattern, by the way, on the NQ before I forget to call it out. In the shadow of the higher high candle, fully engulfed. These histograms are based off of a vertical analysis in time. Most customers never go this way. They never choose to look horizontally on the calendar for patterns in time. They're only ever looking vertically on the charts for patterns in time. And so today I want to show you, A, how to find the signals, and then B, once you find them, put them all on the same chart so that you're not looking at multiple charts together. And what we're going to do is we're going to combine the time patterns from the horizontal analysis with the time patterns from the vertical analysis. And what that will do is give us a fully encompassed encompassing view of the times where these markets are most likely to go up and down. Okay? Let's get started. We're going to start with the NASDAQ. And we'll do an A-B analysis here. We have the NASDAQ, we have the NQ, we have GC, we have CL. But I really want to start with a simple, clean chart. We'll keep the ES here in the background. And this chart is looking back at these times in relation to the history of the last 2 or 3 Wednesdays. Today's Wednesday. Now, what if I want to change that? What if I want to look at what's happened Tuesday, Monday, and Friday of last week? Well, there's an indicator for that called the Flux Flashback Time Cycle Marker. So I'm going to come over here and open a brand new NQ chart. And it doesn't have to be 1 minute, but we're looking at 1 minute here in the live room today. So I'm going to pull up another 1 minute NQ chart. All right. And so here's what I'm going to do. Number one, I'm going to change those candle colors because they drive me crazy when they're red and green like that. I go bonkers, I tell you, bonkers. And we'll just make the wick a little bit thicker, and yeah, there we go. That's nice. Okay, so blank chart, blank slate. I'm going to add an indicator called the Flux Flashback time cycle marker. Now, it's going to do the same analysis that this chart did, but we're going to do it slightly different using slightly different data. I'm going to use the same stochastic filter, and I'm going to start with the same stochastic settings just to be one-to-one, apples to apples, oranges to oranges in this market. And we're going to get the same color dots. Actually, you know what? Let's change them. We'll make the buying pressure dots blue. We'll make the selling pressure dots orange. Now, I can ask the computer to take data from a different place. So right now, I'm asking it to look at the time cycles of yesterday. Go back one day at a time, one time. Go back one day at a time, days per group, one time. So on our calendar, I would be asking the computer to look at this day. Go back and look at Tuesday and project all of the important pivot times from Tuesday onto my leading indicator chart for NinjaTrader. So when I have 1 and 1 here, that's what I'm asking it to do. Does that make sense? Go back one day at a time, one time. Now when I do, this is what I get. When I go back one day at a time, this is what I get. Now, I'm going to make these candles neutral as I can, so the dots show up better. And instead of orange, I'm going to change that color to a slightly darker color so they pop better. It's important that you give your eye an opportunity. There we go. To actually see the signals. Okay, so right off the bat, would we say that these signals are in the ballpark of where we would expect them to be? Should we even see the kinds of signals that we're seeing at these times in the NQ? And by that I simply mean this. When we look at what was expected at the times, I'm seeing that just looking at what happened yesterday, projected forward one day, provided these turns as correct so far. With a failure right here. Okay? Now, the other thing I can do is alter this. Go back one day at a time, 3 days into the past. So go back to Monday, go back to Tuesday, go back to Monday, go back to Friday. You see what I'm doing here? Let's see if we incorporate the last 3 historical days of data and find the time cycles across those 3 historically horizontal days. And let's see if it gets better, worse, or stays the same. You see how it got a little worse? Okay. If I add even more data to it, give me 7 horizontal days of analysis. Go back and look at Tuesday, Monday, Friday, Thursday, Wednesday, Tuesday, and Monday of last week. The results get a little better than the prior analysis, but they're not as good as what we had when we started. So one of the things I recommend when you first start to use the software, try a 1-1, try a 1-3, and then try a 1-7. And see how the results look on the chart that you're tracking. And so right now the 1-1 appears to be the best. There is another less obvious choice. Right now we have 2 charts. The first vertical chart is looking at the last 2 Wednesdays. The horizontal chart is looking at yesterday or Tuesday. And so between those 2 charts, Brent, we now have this. Whoops. Between those 2 charts, we now have this analysis. Do you see how we got there so far? We have a Canaveral at 1017, by the way. If you're not sure what a Canaveral is, go ahead and watch the YouTube video right behind this one, and you will see our lower low with the shadow right there. Next signal coming on the NQ is at 1026 with our vertical analysis, and then we have our horizontal analysis to the right. This one is based off of the last 24 hours. This one is based off of the last 2 weeks worth of time cycles. We have the times coming up to the right here, 1026 and 1032. And in the right hand corner of our chart, the flashback is telling us the next buying pressure signal is in 3 minutes, 1025. So between 1025 and 1026, Brent, we have buying pressure times where the market has been pushed higher. That happened yesterday, and it happened over the last 2 weeks. So do you think 1025, 1026 is relevant for the NASDAQ if it comes up as being important yesterday, being important last Tuesday, being important the Tuesday before? You betcha. It'll be fun to see how that works out. All right, so vertical analysis on the left. I'm sorry, yeah, vertical analysis now is all the way across our chart, tucked behind. Here's our horizontal analysis. And this chart right now, all of these signals are coming from yesterday's important timing signals. Horizontal, 24 hours ago. So, surprising thing for most traders is that we actually have relevant turns occurring 2 days in a row. What happened yesterday is playing out today, right? If all we had was this to work with, we could still take signals with trend. We could still take the breakouts when we get to the touches of the selling pressure lines, right? All of those same rules are in effect, but we're looking at something that happened yesterday. One of the things that I discovered, go back 1 day in a row, go back 3 days in a row, try those. But one of the things I discovered, everybody, is the skipping parameter. Meaning, instead of just looking back on Tuesday, what if you go back every other day? 1, 2, 1, 2, 1, 2, 1, 2. What if you skip and look for a 2-day cycle? Does that make sense? Maybe the banks are doing something every other day. And so it's easy to check for that here. Higher high green dot, blue dot on our vertical analysis. Pattern 5. Using our horizontal analysis right there. It's easy enough to do that, and I want to show you what that would look like and compare the two charts together. So we're going to go ahead and save this template. We'll call it garage temp horizontal. And I'm going to create a brand new chart on the NQ. NQ 1 minute, 15 days, garage temp horizontal. Okay, so these two charts are identical now in terms of where the data is coming from. Okay, the chart on the left is based off of the last 24 hours. This one is going to be slightly different. We're going to come in here, and instead of going back 1 day, I'm going to skip 2 days. Go back 2 days ago, one time. Go back 2 days once, like hopscotch. And when we hit OK, let's see if the patterns are as good, better, or the same. Okay. Derek, can you see how the patterns in here don't suck? I mean, they shouldn't look like this at all for a 48-hour-old guess. If we wanted to add a little more data into it, I can go back 2 days, 2 skips. And you see how the data got a little bit better, Brent? Right down to our pattern 4 lower low red dot. So these cycles came from analyzing Monday and then Thursday of last week, skipping every other day, or what I call a 2-day cycle. And what I've uncovered is that most markets have relevant patterns on a 2 or 3 day cycle, sometimes a 9-day cycle. A 2 or 3 day cycle, and sometimes a 9-day cycle, which is a variant of a 3. So, do you see the difference between the two charts? The chart on the left is based off of the significant times from yesterday. The chart on the right is based off of the significant times from Monday and Thursday of last week using a skipping pattern. So right now, the dots on the chart on this screen are coming from analyzing these 2 pink days. There's one other thing I want to try that I know usually works well, and that's the 3-day cycle. So now I'm going to go back 1, 2, 3 days, 1, 2, 3 days. I'm going to skip, stop, skip, stop. And I'm going to analyze the past 2 skips. And to do that, I simply come down to the indicator and I go back 3 days at a time twice. Can everybody see how the cycle cleaned up? So now this chart, these cycles came from analyzing Friday and Tuesday of last week. And this is a 3-day cycle. Brent, what do you think of that? Derek, what do you think of that? All of the signals on this horizontal analysis came from a 3-day cycle in the NQ. We're definitely in the ballpark, right? The next signal is coming in 3 minutes. Then there's a buying pressure signal coming 11 minutes after that. So of all of the cycles we've looked at so far, the ones that are worth examining are a 1x1, a 1x3, a 1x2, or a 2x1, forgive me, that's going back 2 days one time, a 2x3, a 3x1, and then a 3x2. These patterns you will almost inevitably find a relevant cycle like this one where it crystallizes. So we're going to stick with our current number because it's working out really well. Of everything we've looked at right now, the 3x2 is pretty kick-ass. Now, I'm going to load a little extra data. There is our 3x2 in the NQ right now. I'm going to come in here and just for poops and giggles, I'm going to show you that occasionally I will come in and change this to a 9 and look for a 9-day cycle. And it's not as good as the 3-day cycle was here a moment ago, but there are still relevant time patterns on a 9-day cycle that are worth exploring for you. Okay, so pause the video, go back and set it up for a 3x2 like we had it. And when you find a too good to be chart, too good to be true chart, leave it. Don't mess with it. Write it down, save your template, because you'll lose it. I've done it before where I've gotten amazing settings and I've lost it. Okay, so this is our 24-hour old one. This is our 3-day cycle. Which one are we going to keep? We're going to keep this one, right? So, boom. That one goes away. Where do you set the skip? Okay, last time. This sets the skip. Look at every third day. And this sets how many times the iteration of the skip occurs. Twice. Go back every third day. 2 times. 2 skips. This sets the gap of the skip. This sets the frequency or the number of skipping periods. Very confusing the way that the programmer wrote this out. All right, so now, Brent, we have this pretty good horizontal analysis right here, right? And the vertical just to the left. So now you have a choice. Now we have a choice. Do we keep them separate? Jack, I do not have to change parameters for different contracts and seasonality. No. Once you find a parameter that works, it's locked in. Leave it alone. Don't change it. Pattern 4, lower low, red dot on our horizontal chart right here. Straight out of your guide to the histograms. So you can combine them if you want, or you can leave them separately. If you choose to combine them, here's what I would do. Go into the indicator, right click on any of the NinjaTrader indicator parameter cells, and click Set Default for Flux Flashback markers. So I've burned all of the values that we've changed into the Flashback markers indicator. And now, Jack, look, I can come over here, scroll down, find the indicator in the NinjaTrader indicators list, Flux Flashback time cycle markers, and when I add it, Brent, look, it retained all of the settings from the other chart. And if I hit OK, I've got all my signals here. The magenta signals, these dark red violet signals, are the horizontal, and the ones with the timestamps are the vertical. Okay? As soon as this candle closes, I'll have that same early warning system in the upper right hand corner telling me where the flashback signals are coming next. In the NQ vertical analysis, we had a small dip right here, and we're waiting for a punch down into 1046. So now, Brent, in the upper corner, I have the warning signals for the next 4 time cycles coming up. 1 in 4 minutes, 1 in 13, 1 in 18, 1 in 22. Does that make sense? And that's how you would combine the two things on one chart. So this is telling me between 1046 and 1043, there's been historic buying pressure exerted in this market that's relevant. Okay? So this is the Flux Flashback histogram using the 3-day skip with the 2 frequency in the parameter. And it's telling me when the next signal is coming. So Brent, as of right now, the closest I can get you is this. That's as close as I can get you right now. And then we would kind of scale it out like that, right? Just stretch it till it's just about perfect. So now there's the flashback histogram below. I'll come here and increase the size of the histograms so they show up better. So now we have the horizontal analysis below. We have the vertical analysis above. And all of the dots printing on the same chart. This screen right now represents this analysis. We went back 2 weeks vertically to get the vertical analysis and tell us what times to watch for. And then we've gone back 1, 2, 3 one time, 1, 2, 3 2 times. So in our grid, we're analyzing these 4 days of data, and all of that is giving us this chart right here. I would highly recommend, when you first start using this technique, I would personally recommend you keep the 2 charts separated before you combine them, because it will inevitably confuse the ever-living cripe out of you if you put them on the same chart at first. At least the progression for me, and I'm admittedly not as smart as most of you are, the progression for me has always been keep them separate until they justify being on the same chart. And once you can justify having them on the same chart, then combine the 2 together. This is as powerful as my Superman powers get right now, short of a new indicator that we'll be releasing in Las Vegas called the Flux Time Warp, which is ridiculously powerful. More information is coming about that. Check your emails. But right now, we've basically covered what's been happening lately, recently, with our horizontal analysis on the right, and we've been covering what's been happening specifically on a weekday in relation to the NQ. And just as I said a moment ago, remember when I drew this arrow? Tracy, remember in this video where I said we're going to see a drop down here until 1046? The vertical charts are still relevant. The vertical charts are still relevant. We're still having these patterns, the canaveral patterns, everything that we talked about. Those things are still relevant with a vertical chart on the higher time frames and the lower time frames. So you could very easily set up a vertical and a horizontal analysis on your 240 and your 60 charts as well when you're looking at your longer term swings. The point of this is don't combine the 2, and you may end up deciding that your horizontal is more accurate. You may end up discovering that the banks in the instrument you're following, Jack, are following a 3-day pattern or a 2-day pattern or a 24-hour-old pattern more accurately than your standard vanilla flux signal. What do you do with that? Follow whatever is most accurate. The point of this video and this discussion is that they're hiding their tracks in plain sight. And it took us all of a half an hour so far to uncover every conceivable time that they were most likely to do something. And just following those things, we have tremendous opportunities now to look for buying pressure and selling pressure at very relevant times that we can stake out in the future using very different very unique data sets. That is to say, the chart on the right is getting all of its data from a completely different uncorrelated section. These markets were in and of themselves independent. Everything that happened was completely different here and here than what happened here. So the data from here has nothing to do with this day or this day. And yet, when we look at the two results, it makes a fairly compelling argument, doesn't it? So this chart here took me about 5 years to figure out, the vertical analysis as opposed to the horizontal, which came later. And in Las Vegas, we're going to show you a new technique that completely takes this to an unbelievably different level. Something where we're not even going to reference momentum filters and trend filters and averages anymore. We're going to go straight to the heart of the pivot with the time warp. And so I'm super excited to be able to show that to you coming up in our Las Vegas event, May 1st and May 2nd. So I will save this workspace for those of you watching in my live room right now, so you have this as a template to work with. And we'll continue to follow this in our live room and look for setups over the next hour or so in the NQ. This is equally applicable to gold, to crude, to the pound dollar, to the euro dollar, the CAD, the NASI. You can use this in the E-mini S&P. You can use it any instrument you have data for. This experiment, I very much would love to encourage each of you to go back and study and see for yourselves that this isn't happening with this same vertical horizontal shift in the instrument you're trading. If you have any questions about this or you'd like to get the workspaces or templates after you've seen this video, just email me, Michael at backtothefuturetrading.com.